Good day, ladies and gentlemen. I am your host Darren, and welcome to Forex Funnel. Today, I'll be showing you a very basic trading strategy, which is based on the 1 hour, and that's it. And we'll be making use of the EMA, and that's the only indicator we'll be making use of. I hope you are here to stay and join the channel. Subscribe, like, and comment on the videos that I should make to help you educate yourselves and improve your trading. I am here for all good intentions, and I'm sure that this video will help you understand trading a bit better. So let's get into the video and let's get started. Right now we are on NAS 100 or NASDAQ, which is a similar stock. So as we can see, we are on NASDAQ on the 1 hour chart, and this is a very basic strategy. It consists of a couple of rules and conditions that you need to follow. So let's get into the strategy. The first rule that you need to identify is the type of market that you are in and the type of trend that you are in. So as we can see, we are in an uptrend, so that means that the price is above the 20 period EMA. So the next thing is that we want to look for a candle that crosses the EMA in an upwards direction. So we are in a bullish market, a bullish trend, an uptrend, and structure wise prices are making higher highs and higher lows. So what we are looking for at the 20 period EMA is that we are looking for a candle that breaks through the EMA. That's the first condition. The second condition has my own twist to it, but if you want to be more conservative, then you can use the first way. So the first thing that you need to do is identify the trend. The second thing you need to identify is look for a candle that crosses the EMA, which is a green candle because we are bullish. The next candle, which is the adjacent candle that follows right after that candle that breaks the EMA, that candle needs to either close above the high of the previous candle that broke the EMA, and the exception is that if that candle does not close above the previous high of the candle, then the next candle should be a green candle. It's supposed to be a green candle if price does not close above the previous high of the previous candle. If you want to be conservative, then you should wait for price to actually close above the high of the previous candle. But for me, since I'm an experienced trader and I have tested this strategy out 100 times, so I've placed 100 trades because I want to get a percentage out of this. So if I place 100 trades based on the strategy, and which I have, and I have won 63 out of 100 trades, so that means that the 63% winning rate that I have based on the strategy, that is good enough for me because I'm winning my trades more than half the time. So let's get on with the strategy. Let's continue. So what you're looking for is price to break above the EMA or break through the EMA. We want the adjacent candle to either close above the high of the previous candle, or we want that candle to be green. So our entry will be on the candle that closes above the high of the previous candle or a green candle. You can put your stop loss. I normally put my stop loss below a certain area of structure which was tested for resistance in the past, but now it was tested for support. So price won't come back to that area and most likely find support. So I'll put it below an area of support, which is now going to become an area of resistance. And my risk to reward ratio, I normally use a 1.4 to 1 risk to reward ratio. The reason why I use this risk to reward ratio is because it has a chance of getting smashed more than half the time. So as we can see that this trade played out beautifully. It was a trade I took, guys. I'm not lying to you. This was a trade I placed and I took. That is why I'm using this strategy, and I went back to the history of the chart to find this trade specifically because I have placed it when price was in this area. So I just want to show you guys that this strategy does work very well it isn't consistent, but you are winning more than half the time. So as you can see, let's just go over the rules again. What we are looking for is price to break the 20 EMA. The next condition is price needs to either close above the high of the previous candle, or the candle is a green candle. So this will be our entry on this candle right here. I'll place my stop loss below this area of resistance on the left here, and I will have a risk reward ratio of 1.4:1. As we can see, we have played out this trade beautifully, and we have won this trade. Right, ladies and gentlemen, we are on the Aussie dollar, and I want to show you that this works not only in forex but in cryptocurrency as well. It works in all kinds of market stocks as well. As we can see, let's just go over the rules again. So what we are looking for is price to close above, is to cross the EMA and close above the EMA. We want the next candle to be a green candle, or we want that candle to be closing above the high of the previous candle. So let's get into the trade. So your entry would have been either here, if you missed this entry on the left here. As you can see, we have a couple of entries. If you have missed this entry, you would have a chance right here. If you missed this entry, you would have a chance right here. So I've played this trade in the past, in the May month, last month. I've played this trade exactly this way. I'm not kidding, guys. When I say that this strategy does wonders, you can win like 5 trades straight, you can win 5 trades back to back by simply using these rules and using this risk reward ratio. Remember, guys, it's about consistency. It's not about wanting to make a lot of money or wanting to make or gain 100% profit back. That's not what trading is, guys. Trading is about being patient. It's about execution. It's about finding the best working strategy so that you can become profitable. So as we can see, this trade played out beautifully. You had price pulling back to where we entered at, but price eventually pushed high enough and broke and smashed our TP. So I just want to show you price crossed the EMA. We had price closing above the high of the candle that crossed the EMA. I'll place my stop loss below the support level, and I'll be using a risk reward ratio of 1.4:1. So as we can see, that price did in fact smash our TP. This strategy does wonders. Like I said, you can use this to become profitable, but you need to wait for the rules, and you need to wait for price to either close above the previous candle that broke through the EMA, or you wait for a green candle. Right, I found another example of this trade, which I also have placed in the past. I'm just trying to remember all the trades I've placed within this pair itself during the time of month of June and May. So right now we have price crossing the EMA, we have price closing above the EMA, above the previous candle, I'll place my stop loss below this area of support, and I'll be using a 1.4:1 risk to reward ratio. As we can see, price in fact did smash our TP, and this trade played out beautifully as well. We had price pulling back, but since this was an area of resistance right here on the left that turned to support, we had price finding support at that area. And if you want to know how to trade support and resistance levels in trending markets, I do have a video on my channel. I will also leave a link to that video in the description below. Right, we are on a British pound USD dollar, and we are in a downtrend, and I'm going to show you a bearish version now. So as we can see, we are in a downtrend. That is the first condition that you need to look for. The second condition you need to look for is for price to have closed and broke through the EMA. The next condition is that the candle that forms after that candle which breaks the EMA, that candle either needs to, if you want to be conservative, that candle either needs to close below the low of that candle, which will indicate that price is more momentum to continue in a downwards direction. The same thing for a bullish version. If price closes above the high of the previous candle, which broke the EMA, that means there is more buying momentum. So as we can see, we had price crossing the EMA, we had price closing below the previous low of this candle. Our entry will have been on this candle, and I would have placed my stop loss above this area of resistance, and I'll be using a 1.4 to 1 risk reward ratio. As we can see, we had price pulling all the way up here back into our stop loss, which got me scared. But part of being a trader is that you're gonna have to be disciplined enough to let these trades play out, because you have these trades where price pushes all the way, almost stopping you out, and then price just starts to move away. And in those moments when I started trading, it was very emotional. I was very emotional because I hated losing money. That is why I started trading on demo accounts, so that I can get a handle of the psychology behind trading, because psychology is very, very important, because you need to have the psychology in order to stay true to the trade and let the trade play out. Otherwise, if you are not psychologically ready or have the psychological capacity to wait and be patient, then you will never become a profitable trader. So as we can see, price did in fact smash our TP, and that is a winning trade. We have another example right here on the GBP, British pound and US dollar. Same rules apply. We have price crossing the EMA, we have price closing below the low of that candle that broke the EMA. Our entry will be on that candle. My stop loss will be above this area of support on the left, because that area was tested for resistance. So it's most likely price will not break above that level, because we are in fact in a downtrend. That is why it's important that you actually identify the type of trend that you are in before you actually start placing a trade, because this trade is dependent on structure and trend as well, not only the EMA and price crossing of the EMA. But as we can see, that this trade played out beautifully, and price in fact did smash our TP. As we go further left, we do have another example right here of price breaking the EMA, and we have price closing below that low of that candle that broke through the EMA. And I'll place my stop loss above this area of support, which is on the left right here, and I'll be using a risk to reward ratio of 1.4 to 1 risk to reward ratio. Like I said, I use this risk to reward ratio because it has a better chance of getting smashed more than half the time. So that is what my strategy is all about. That is where I become consistent, and I can leave my trades to play out. I can place a trade and I can go and do my business and come back and find that my GP has been smashed. And it's the same thing for overnight trades, and it works very, very well. So that's it for the video. Thank you for watching. I hope you are here to stay, and I hope you are here to learn and guide yourself as well, because you need to educate yourself as well. It does not matter about the videos that YouTubers and traders post out there. Yes, they are educational, yes, they help, but it's important that you do your own due diligence and you do your own educational training, or going back and really understanding the market, because if you have that understanding, you will understand the strategy a bit better, actually a lot better. So once you have that information and that education with the experience, then you are likely to know why certain strategies work and why certain strategies don't. And this type of strategy is a type of strategy that you can use when you identify a trend and price crossing the EMA. Like, even though we are in a downtrend right now, on the right here we do have price closing crossing the EMA, and then we had the next candle, the adjacent candle, being a green candle. So you see that this is a strategy that you can use when the market is about to change or reverse. So as you can see, we had price crossing the EMA, we had a candle that is green, which is the candle that followed the candle that broke through the EMA. I'll put my stop loss below this area of support, and I'll be using a risk to reward ratio of 1.4 to 1. As we can see, it doesn't matter if you're in a downtrend or uptrend. As soon as price closes and crosses the EMA in an upwards direction or downwards direction, the following candle after that is very important, because that will indicate momentum in the upwards direction or downwards direction. So that is it. That's my final thoughts. I hope you enjoyed the video, and I hope that you guys do your due diligence as a trader, because that's important. And that's it. Peace out.